A Senate Bill 2774. Imagine this. Imagine a company that rents uniforms and linens to businesses across Texas. Instead of being taxed like most other service type businesses, it now gets treated like a retailer and pays a lower franchise tax rate. What the bill says it does. Senate Bill 2774 says certain uniform, garment, and linen rental businesses should be classified as retail trade for franchise tax purposes. It presents this as a tax classification change for a specific type of business. What it actually does? This means a narrow industry gets a permanent tax break by being moved into a lower tax category. That lowers what those companies owe, while the lost revenue has to be absorbed elsewhere in the state budget. The fiscal note shows the loss hits the Property Tax Relief Fund and has to be replaced with general revenue to keep school funding supported. Who benefits? Industrial uniform rental companies, industrial garment rental companies, industrial linen supply rental companies, industry groups that pushed for the change. Who pays the price? The broader state budget, taxpayers who depend on general revenue funding staying stable, programs that compete for the same state dollars, Texans who do not get similar carve-outs but still help carry the system. Why it matters. When the state gives a permanent tax break to one narrow industry, that missing money does not disappear. It has to be made up somewhere else. Even if the bill looks small, these kinds of carve-outs can add up over time and put more pressure on school funding and other public priorities. It also opens the door for more industries to ask for the same kind of special treatment. Bottom line, Senate Bill 2774 gives a targeted industry a permanent tax advantage and shifts the long-term budget pressure onto everyone else.